Hello, this is Kosta on my YouTube channel. On this one, I am sharing my startup experience. I initially wanted to name this video what do you need to start a company or to launch a startup, but eventually when I prepared more and more, I decided to call this video what do you need to raise funds from investors. So, or in other words, how to prepare your startup and what do you need for your startup to raise funds from VC or VCs or angel investors. Let's begin. First of all, I want to tell you that this is going to be probably the most difficult, the most hard video from me. It's because it's going to be, there is a caveat. It's going to be long. Just trust me, it's going to be long. It's because it summarizes my experience for the last about 15 years and preparing of my own startups, my own projects, and a variety of businesses I helped too. You don't need to watch the entire video. In the description to this video, you'll find a directory, content for this video. Just feel free to go to the part you are more interested in. It's because I knew this video is going to be long and I'm not sure it will be possible to me to record it in a single shot. Probably I'll take a couple of days or maybe a few days to get it completely recorded and filmed to introduce it to you, because I didn't want to split it between parts, because I don't like videos split between different parts, because I don't know, it's how I feel it. So today I want to claim something. I am not, about myself. I am not a professor who is teaching at a university or at a business school with zero business experience. I am not a person who is just gathering information across the internet and then repeating it after someone he heard from on his or her YouTube channel about how to start business, how to launch a startup, etc., etc. I'm a proper startup founder. I launched a number of businesses in the past. In the past, I was employed just twice in my life, and that's it. I don't understand how to work for someone or for a corporation enterprise. It's not my cup of tea at all. That's why today I can tell you about at least 3 successes of my life. The first one, at my age of 21, I sold my first company. It was a chain of 3 shops. We supplied. I sold mobile phones. It was back in 2008. I sold mobile phones and satellite dishes for the internet access and satellite TV. It was like my first recognizable success at a very early age of mine. My second success, my previous startup called Countbox. You can go and check online. It's countbox.us. I raised almost $1 million of US, real cash from 2 quite reputable investment firms. You can find this data across Crunchbase. That's my second achievement. And the third, my very recent, and it's like my actual business company today, named PayMob Smart Payments. Check it out on Crunchbase. Techstars, a very reputable American US VC firm, became my very first proper investor at a pre-seed stage. Invested $120,000 United States dollars about a year ago, and less than a year I took to bring my company to another level of success. It's because literally in the months of October and November, literally last month, I secured my seed funding round, which hit 3.5 million US dollars, which is twice more amount of money than I was seeking for initially. That's why I'm sharing my real experience with my real achievements. Ready to go? Okie dokie, let's move on. Overall, I listed 22 points you need to prepare your startup to raise funding. I don't think it matter at which stage you are raising. Probably more or less investors and your partners and your customers, your clients, even your team members will expect you to either prepare all of these things yourself or to get them prepared by third parties, but you must be a proper expert almost across all of them. So let's go for the first one. While I will be telling you somewhere here or there, I will be asking my editing team to add examples of what I'm talking about. First of all, you must create a 1-minute video about your idea, your product, your startup. If you don't mind, I can play my 1-minute video for you about my company as an example right now. My name is Kosta. I am a CEO and co-founder of PayMob. First of all, we made the fundamental thing. We made ordinary smartphones like this one, affordable Android phone, to act as a card machine, basically like this device. What it means, we enabled payment acceptance like this one for ordinary smartphones, and we made them able to accept card payments. That's what we did. Voila, and the payment went through. That was the foundation of everything. At the same time, we built its SDK. That's why today's PayMob's customer is a solution vendor who is serving any sort of business like restaurant, ERP, POS system, ticketing solution, transportation industry system, or a financial company. By the way, when you will write down a script for your 1-minute video, you definitely will find that 1 minute is a quite strict limit, and you are limited by about 150 to 100 words. That's why you must convey the core of your business. That's why it's difficult thing to get done. Another video investors and clients will expect from you called a proper investment pitch that takes 3 minutes. So when we accomplished our Techstars acceleration program early this year, Techstars asked us literally to record 3-minute video to present in the front of the investment committee and at the Techstars demo day, which took place on the 7th of April 2021. Again, if you don't mind, I can show you my own example and can play you the whole 3 minutes video right now.
Hello, we are the PayMob team. Do you know a story of payment terminals? Everything started back in 1967 with these two items, a card in consumers' hands and a terminal in merchants'. Only in almost 50 years, Apple made a revolution. They replaced the physical card with a mobile app called Apple Pay, then Google, Samsung and so on. But merchants still use expensive dedicated hardware on their side. Today, fewer than 10% of small businesses are taking card payments because it's inconvenient and predominantly it's almost unavailable for small businesses. It's just the burden of having to carry around the additional device always with you. At PayMob, we closed the loop. We developed PayMob app that turns ordinary smartphones into contactless payment terminals in line with the latest contactless payment standard. It's not the craft anymore. We made the impossible real. It's a legit technology approved by Visa, MasterCard, American Express and China Union Pay. Let me show you how it works. For example, a cup of coffee in London costs £3. Now the barista clicks the button card payment. Now the app is expecting a consumer to tap the card behind the phone, like this. This is a fully legal receipt. It could be mailed or just skipped. The PayMob app is a universal tool to accept all types of contactless payments, cards, phones, and even a smartwatch. We don't compete with conventional payment solutions. Instead, we develop a new niche to empower existing commerce solution with a feature to accept card payments. But it's not only about small businesses. Think about financial inclusion, card payment acceptance penetration, and emerging markets. Think Latin America, think Africa, think South Asia. We have been working hard for the last 3 years to get it done. Our go-to-market strategy is B2B2C. We share transactional profit with our partners. We provide the technology to commerce solution vendors to empower existing services.
Point number 3. What a fundamental thing for both video pitches. It is an elevator pitch. Basically, why it's called an elevator? When you are going to a lift, elevator, whatever, you have just a little time, just seconds, to tell to a person next to you what are you doing. That's why you definitely can spend weeks or days just understanding and crystallizing this phrase. Because, for example, if you will check what Uber does, what Facebook is, or what Google is, etc., etc., all of them eventually ended up with a crystal clear message: who they are, what they do. So we spent about 6 or 7 months at my own existing company, actual company, PayMob, to finally develop that elevator pitch. Ultimately, now we are saying PayMob is a payment engine for mobile business applications. That's it. But we spent a few months to get it understood. That's why PayMob now is a payment engine for business mobile apps. That's it. The majority of people you will encounter, and this is a point number 4, don't want to spend or waste their time on exercising the whole pitch deck of yours. I know about 60, 80, 20, 30 slides. You can count it yourself. Nobody would like to do it. So the only thing then can spend a little bit time on is an executive summary or a one-pager document. So it usually calls a one-pager, but it literally doesn't mean just one page of A4 like a letter sheet. It's not. Basically, you can go, let's say, horizontal, you can go slightly longer page, but it must be just a single page that again shows everything, shows your product, your core value, added value services, your team, your achievements, your traction, like a proper summary of what have you got so far. And trust me, it's very difficult to build this one pager, but you'll get used to it. Trust me, if you'll spend a little bit more time, a few months at least. Then, point number 5, the proper investment deck. It must not be longer than 10 slides. So there are a couple of golden rules by a couple of Japanese philosophers and American VCs about what a structure of your investment deck should be, and what in particular each slide should tell about your business, your startup. To be honest, when you spent a few months or a couple of years on developing your baby, your startup, your business, you have so many things to say, and you definitely want to build, 40, 50, 60, 80 pages pitch deck just to show them everything. How great are you? How great your product is, etc., etc. But you must limit yourself by just about, 10, 15 maximum slides. And again, to write shorter, it's more difficult compared to write whatever long you want. That's why the structure is here, just bam, 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 bam. That's going to be your 10 slides. Please pay attention and try to squeeze the most important things from everything you want to say about your baby. Point number 6. It's quite tricky, but it's a legal obligation. You can just walk around and ask people for money. It's because it's illegal activity, to be honest. That's why you must develop a proper disclaimer slide and put it as, usually I was recommended by lawyers to put it as a slide number 2 on your either deck you will be spreading around. It's because it's like an important point to let them know you're not, let's say, asking for money now, you're just informing them about this beautiful company, and probably some of them would like to get in touch with you. That's why this proper disclaimer must be added to your deck. Personally, from an aesthetical point of view, I cannot say it's great to have it as a slide number 2, but if you can add it somewhere at the end before your contact details, I think you're gonna be alright, but ask your lawyer, probably he or she more strict on it. Oh yeah, and the point number 7, the main investment deck. That's where you definitely can build a 30, 40, 50 pages slides investment deck. So this deck will be required by some people who already got in touch with you, kind of express their interest to invest in your idea, or you felt it and they asked you for more details. That's a place to tell everything of your baby, to add customers, comments, feedback, etc., etc. So here you have no limits, but again, you must be precise and punchy and understand crystal clear what each slide should evoke in the consumer's browser's mind. So that's exactly thing you definitely need. It's because, for example, you got 1 minute, you got the elevator pitch, 1 minute, 3-minute video, short deck, and then the investor will ask you, hey, can you give me more details about your startup? And you have nothing to share. And to develop this quite complex piece of document, you need to spend 2 or 3 weeks to check spelling, to check the language, to check some figures with your finance guy, etc., etc. Basically, your investor, the potential investor of yours, maybe the first one, wouldn't like to wait that long. They need you to be ready today. That's why you need this main investment deck ready to shoot immediately. Point number 8. It is a slightly different, but again, a presentation of your startup. But now, so let's imagine you told about your idea to a number of people, you was invited to a conference to pitch at a stage, you got the 3-minute slot to present your thing. For example, I did this at the latest Web Summit event, which took place in Lisbon just a couple of months back, a month ago. That's how I did it. Watch it just for a shot.
Hello everyone, my name is Kosta. I'm a CEO and co-founder of PayMob. Today I'm on this stage to tell you about the very latest tech in terms of payment acceptance, especially for small and micro businesses. Basically, it's not a secret that the small business industry is growing rapidly, especially through COVID. So many people got a side hustle and they definitely need to be paid. At the same time, I would say that based on real data, so little percentage of small and micro businesses are accepting digital or card payments. At the same time, MasterCard alone commits to bringing 50 more million small and medium businesses. I'm not talking about like enterprises, I'm talking about one-man businesses, solopreneurs. But for them, for these, let's say, gig economy representative, for freelancers, this solution, this one, the old banking tool, it's not an exit at all. It's not their tool. That's why we don't use it. At PayMob, we designed a mobile application that makes any mobile smartphone like this one to act as a card machine. Basically, you download my application and you charge by using just your phone. That's it. As simple as it. No additional hardware required. Download the app and start accepting payments on demand. That's why we are preaching an idea of embedded finance, payments as a service to all of our customers. We've got two solutions in place. We've got a standalone mobile application as well. We've got an SDK to empower someone else's applications like challenger banks, neobanks, restaurant applications, courier, taxi, delivery guys, etc., etc. That's how recently we identified the most important industries like restaurant, transportation, finance, and telecom to empower them and enable card acceptance in app. That's kind of a good example from the restaurant industry. We've got apps embedded our solution. So far, we have been working on this product for 3 years. We got a financial license acting as a payment company. We are live in the United States, UK, across whole European Union. Going to be live across GCC countries next year. So far, you can see us live. If you are based in the US, you can just purchase this phone or download our app and you're good to go. I am here to tell you about the beautiful embedded finance future for the payments. Thank you.
So, as you can see, if you could get it, the difference between the investment deck to be emailed or let's say shared with investors prior to the meeting or just for their self-understanding, self-check, it's completely different deck rather than a deck which will support you as a speaker on a stage. So it must have just 5-7 slides. That's it, maybe more or less depending on the complexity of your solution, but the slides, you don't have the right to put anything in writing in these slides. So as more imaginary you can put, then much better. It's because you definitely don't want your listeners to pay more attention to the slides rather than on yourself. So you are the main violin on this stage, not your deck. That's why you must have as less as possible words, or let's say 1 word per slide. That's it. Then more images, then better. Point number 9. Going to be slightly difficult if you are especially starting. But let me split this point into 2 parts. So the first part, if you just starting your idea and you are starting to raise money at a very early stage, you definitely don't have traction, proper traction. So you have no revenue, no clients, no customers, no proper feedback, right? It's because you probably haven't got your product developed yet, or service, whatever, right? The idea is, anyway, investors will expect some confirmation that your product or your service has a certain demand. What can you do with no product, no service? You can talk to potential clients of yours who potentially will consume your product service, and you can ask them to either sign a memorandum of understanding how are you going to conduct the business together, or to put their intention to consume something from you on a piece of paper, or just write down a quick letter, just a few lines that they spoken to you, they got your idea, they have a potential interest to consume that from you. It's like when you're raising at a very early stage. But when you are raising at a later stage, or for example you are already raising seed funding or seed round or round A, etc., all investors, regardless of their size, their geography, they will definitely expect from you a confirmed traction. So on this slide I will show you how I sold my previous startup to investors and why they gave me money. It's because I consistently showed a repeatable success, and my customers became that day bigger and bigger, and my orders and my supply grown in the past. That's what they definitely want to see. Just a growth, just a hockey stick, or some pattern of you building a hockey stick in terms of sales. The forecast must be accompanied by a financial forecast for at least the next 3 years. The first year after you will raised and secured money must be separate by month. So they basically want to see how successful are you going to be with their money month by month. The second year can be split by quarters, basically first quarter, second quarter, etc., because that's what they definitely want to see. As again, when you're raising, the third year will be more opaque, more vague. That's why you definitely can put just 3-year figures just as a single column without any detailed information, because to be honest, everyone understands it's difficult to predict what's gonna happen with a startup in 3 years. Point number 10. We are now moving to a point of a product roadmap. So basically, when I said product roadmap, it's not about your new products, etc. It's about how are you going to develop and make your product more beautiful, more attractive. What are the features you are going to introduce to your users, consumers, clients, etc. This product roadmap must be aligned with whole strategy of yours and your probably horizontal or geographical expansion, and it must definitely convey the truth what exactly you want to build. It's because some investors, they will definitely can help you with the right introductions to the right people in terms of geographies, in terms of product features, enabling something. That's extremely useful. Everyone will ask you to show your product roadmap, and you must have it again for at least the next year. It's because again, it's difficult to predict what's gonna happen on the second year. Point number 11. Whoa, it's your general plan for 12, 24, and 36 months. Again, it is not a product roadmap, it's not your financial forecast, it's not your P&L. It's like a wider perspective. So basically, what countries do you want to be in, let's say, next year, second year, third year? Who is your ideal customer? For example, today you can serve individuals, right? But tomorrow you can switch to small and medium businesses. Or you probably will be starting from B2G business to government. Probably you will be serving governments at the beginning, like, I don't know, Xperia, for example, the credit history guys, but then they started to serve small and medium businesses, then they went down to individual consumers, right? That's why your investors will be happy to see your general plan, geographies, customer profile, your areas. Probably today you will be providing exclusively accounting services, just simple, straightforward, clear. But tomorrow you probably want to start open bank accounts, right? It's gonna be like a completely different but linked to your core business idea thing. That's why it's absolute crucial thing to have your general plan. I hope you are not tired or not experience any fatigue, because yeah, I promised it's gonna be a long talking video, but I hope you enjoy the examples here and there. The next thing is your key milestones for at least the first 18 months. Because when you will be asking for investors' money, they will be asking you in reward. Okie dokie, hey Kosta, you're taking our money, what are you going to achieve? And again, it's like again another angle of all the things we've just discussed and I told you about, but it's more about, yeah, it's kind of forecast is good, but what are the real achievements you want to get to? For example, we at PayMob, we definitely want to serve in 2022 at least 10,000 small and medium businesses through distribution partnerships. That's kind of our ideal goal. We know the exact number of partners we need next year. We know how many sales developers we need to bring in. We know how many of them will be successful, unsuccessful. We've developed some expectations, but definitely investors would like to know how are you going to spend their money. So they're giving you 1 million US, okie dokie, what you will bring in reward to that investment. The majority of them are hunting for your valuation. So basically they gave you today 1 mil for, I don't know, 25%. Your valuation is 4 million US post money. It's okay. But at the next round, they are expecting you to raise maybe 5 mil US at for, I don't know, another 15% to get to the valuation, I don't know, 15 million US post money. That's how investors make money. That's what they expect from you. Point number 13. So it's like marketing or rollout plan. Again, it's another angle. It's more about customer acquisition cost or CAC. The idea of this plan, they want to understand, the investors and angel investors, VC, they want to understand how exactly will you deploy their money to achieve promised milestones, to achieve promised forecast, financial results, etc., etc. So basically, you need to tell them we're going to exhibit at this particular exhibitions, we're going to invest that amount of money in ads, we're going to go for direct advertising, etc., etc. So marketing plan with a proper marketing budget, it's a must-have thing. Point number 14, 1-4. Again, it's more about unit economy. So basically, for example, if you need to invest 5 business developers with an average salary 50 grand a year, let's say it's 250K a year and 200,000 US on Google Ads. In total, it's going to be 450,000 United States dollars to acquire a number of customers, individuals, businesses, whoever you serve, and they will bring you, I don't know, maybe 200,000 US for the first year, or maybe for the first 3 years. It's going to bring you to a negative unit economy. That's why investors will definitely be wondering, okie dokie, you will take this money, this is your rollout program, your rollout plan strategy, but what is your unit economy? How much each user will bring back to you based on the invested amount? It's about like ROI, return on investment, how much they will pay back to you. That's why this is another thing you will be asked by your investors. Whoa, these ones, the 15th, going to be probably the most complicated. It's because even for quite mature companies, it's still quite opaque sometimes. But if you will crack on it very early, you will be really very, very rapidly successful. So it's a customer profile and the exact problem you are solving. Because it's really a nightmare. I know it's like sometimes it's all investors are saying it's bad when a solution looking for a problem. Yeah, it's hard. But at the same time, I have my own theory on it. When, for example, you are not sort of developed a solution and looking for a problem to solve, but when you can make a pivot. So basically, you recognized a problem and you imagined a proper customer profile, but after a while, you realized that your solution, your product, used by completely different customer profile, and your product resolves their issue much better. They have a bigger problem that really worth to be solved first of all. That's when you can make a pivot. But investors, again, and your customers definitely want you to understand them and their problem. That's why, dear, talk more to your clients and you will understand so many beautiful things early, and you will avoid so many mistakes you will make if you do not listen to your clients. Trust me. We are moving from less difficult, less complicated things to more complicated things. Tam, sam, som. Total addressable market, serviceable addressable market, and all of these things, and your, let's say, market you definitely can serve. Investors will never invest if there is no chance to grow a unicorn with a crazy big market like Uber, WhatsApp, Facebook, etc., etc. So there are thousands of companies, or let's say hundreds of companies, which became unicorns. But initially, you must solve quite big, widely spread problem. If you will be solving a problem of, poor quality water in a small village, it won't sound promising at all, because you have no scale. Your startup will never be big. That's why investors at the first glance, they definitely want to see big numbers. But here I want to bring another caveat. It doesn't mean that you need to take whole global, I don't know, climate change problem, which causes $1 trillion problem when you are, I don't know, developing a nice piece of technology. You can do this. You need to narrow down the exact industry to understand the real problem your solution can solve and how much that consumers can pay to you. That's why you need to be precise and deliver this message crystal clear to your investors. Point number 18. Okie dokie. We went through quite complex ones. Let's go to a slightly simpler one. Cap table, capitalization table. Basically, a list of all owners. For me, it looks like I own 30% of the company, my partner owns 70% of the company. That's it. It's simple, but even at the very early stage, you must claim this legally to your even very first investors, angel investors, accelerators, all of these guys. They want you to claim that who are the owners of your actual startup. Point number 19, 1-9. We're very close to the end. Bear with me. So, the next question. Regardless your stage, investors will ask you just a quick question. What is your burn rate? The burn rate means how much money do you spend a month to support your startup, to pay all salaries, to keep yourself alive. I know they can find it in all of these beautiful spreadsheets, financial forecasts you can provide them with, but this quick question you must be prepared for. For example, when we raised we raised our seed round, our burn rate was 25,000 US per month. Easy, clear. Now our burn rate is about 60,000 US. But you must know this exact number. It's because you are a CEO of your startup. You are an owner. You're spending the money. You are the person, the most responsible person for the money they probably will give you. They will give you. Trust me, just work hard on it. Yeah, that's why burn rate must sit in your head always, even overnight. Point number 20. As we mentioned at the very, let's say, first points, if you have got a business and you're raising just to get it better, more functional, or expand to a new geography to penetrate another market, so basically your investors want to see some confirmation that your further customers are completely really interested in consuming this tech from you. Technology in a new country, in a new continent, new feature. So basically, again, talk to your customers, to actual customers, tomorrow's customers, the most promising ones, less promising ones, just get their feedback. If you can, ask them to write it down as a letter that they are interested in that new feature you're going to deploy, this new country you're going to penetrate in. So basically, your investors will be satisfied a lot with any written down confirmation from your clients. 21st. Let's talk more about the investors themselves. So, regardless the stage you will be raising at, your investors want to understand what are your further plans to raise the next rounds, or are you going to sell the company? Are you a serial entrepreneur, or are you an entrepreneur who is building a really big company for, I don't know, 10 years, until you will hit your very first, maybe the second IPO. So basically your investors must, and they definitely want to understand your plans for the future, as long as, I don't know, 5-10 years, just your raw ideas. What is your intention with this particular business? It's absolutely crucial for them. It's because it will help them to make their own decision. Probably some of the investors, some of the investors, they do not invest in companies if the founder don't want to build a big thing. They are targeting more, let's say, long-term investment strategy. They want to exit later, but with a better multiply. The best point of exit for them is going to be at the IPO, when your company will be evaluated at, I don't know, 14 billion and above, right? Another type of investors, they are focused on more, let's say, short-term wins. For example, they invested at valuation 1 mil, they want to exit at the next round at valuation, I don't know, 5 mil. It's because probably they have just 50K in their pocket to invest today, and to make 5 ends in a year. That's kind of could be an intention for some shape of investors. You must bear this in mind. And prior to getting to that question, try to understand what the strategy for this particular VC you're talking to. Again, point, and the last one, I promise, point number 22. The exit strategy for your investors. Because again, as I mentioned on the previous point, 21st, they could have, each investor has their own exit strategy, but they want you to understand where are they at, and to understand where each investor would like to exit your venture. That's why you should align your vision and their intention to exit all together. And for example, if an angel investor investing in your idea today at a quite rough, I don't know, valuation of 300,000, the whole startup at idea stage valuation, okay, she invested 10K just to buy your some service, disk space, whatever, AI thing, doesn't matter. They probably tended to exit in 3 years with I don't know, 10-15x. It's okay, you should take it if it's aligned with your strategy. But larger investors, you definitely must be transparent with them in respect to how they and when they want to exit your startup. That's kind of my very old experience I collected for the last 15 years of launching businesses and startups. Trust me, when you will be on your own journey to raise funding, to start your company, to do all of this yourself, you will find this list very useful, and please have it in advance. It's because to develop each single thing is an expensive in terms of time, sometimes expensive in terms of money. That's why have it in advance. I hope this video and my advice helped you and will help you to raise sufficient amount of money for your venture. I wish you very good luck and all the best on your journey.